Good morning, ladies and gentlemen. This is Nuke, and I am coming at you with your trading recap for Friday, January 4th. It's a little bit late. I had a kind of a long day and was feeling tired, so I went ahead and hit the bed early and got me some good sleep. And I'm going to go over the SPY and a couple of trades I took yesterday, as well as the tickers that we looked at. So without further ado, let's roll right into that. So the first thing we're going to look at, guys, is I had marked off some trend lines yesterday, and they were just rough going, and this was my main concern. But when the SPY popped up pre-market yesterday on Friday, it tested this trend line and it validated up in here. So by the 5 a.m. mark, when I came online and I seen this was validated, I left it alone. So right out of the gate, it kept coming down, but then it popped up. And when it popped up and over this trend line, then it came back to retest the pre-market high, and then it got back up and over this trend line. It was decidedly, it was going to be a stronger day. So I had a little conviction that I was going to be playing the long game, not the short game today. And sure enough, it popped up, hits the 50%, tests it twice, tries to come down for a third, and then it pushes on up to the 100% extension to the upside. So very nice, and still has been maintaining that upward trend line. So that was really, really well. Moving forward as we go through these, we're going to start off with Apple. As you can see, the day before I had a trend line drawn downward. That was for resistance. Well, coming into this morning, we didn't have a lot good other than this little forming trend line here, but it wasn't telling us a story, and it wasn't really matching what we were seeing on the SPY. So I just had not drawn a trend line at that point into that. So let's get into what actually did take place on Apple. So as it was coming down, it found resistance and support here at the first candle of the day. It opened a little bit higher than that, but it fell down, came right back to that, and then it bounced up. And then what's important to me is, where did this thing go? It's having this choppy consolidation, but in an upward direction. We are setting in higher lows, right? So it is showing a strength. And then it retested this pre-market high a little bit. It tried to break out, then it tried to come back down, consolidated, and then it had a good solid green candle here before picking a direction and going up. It momentarily stops out at the 50, goes up a little more, tries consolidating back down to the 50% extension on the high side, gets its footing, comes on up, comes squarely up to the 50 or the 100% extension to the high side at the 147.82, and then it gets up to the next Fibonacci above that before it falls back down and basically hovers around that 100% extension for the rest of the day. $4.75 range compared to its normal true range of $6.63, and that's give or take almost $2 difference, which it's not performing as good as it could have. What would that next level have been? Well, add $2 to the 148 would have taken us up to the 150, and we would have been able to solidly catch that 150% to the high side extension, but that didn't happen, right? But all in all, very easy to track for the day. So coming forward into the next ticker is going to be Netflix with an average true range of 1531, and it actually did better than it normally does today. And part of that's due, you see how much range we had on our pre-market action from that gap up, and that really helped us to slightly beat that normal range. And going forward from yesterday or from Thursday, we were holding a slight uptrend throughout the day, and then it kind of lulled off, and then when the trading opened for Friday, it had gapped up, and it held that nicely and was forming a really solid nearly 45-degree angle of activity, for price increase there off the 200. So we'll get into it. So we knew looking at it, it was going to be a long day for Netflix. And right out of the gate, it had a red candle drop down, but then quickly caught itself, had a double bottom, and you've seen it setting in some higher lows, and then immediately popped back up to the pre-market high And then it retested that a few times, but continuously setting in higher lows. And on the third time that it tested it, it popped up, shot through, ran right up to the 50% extension, petered out for a little bit, and came up, tried to retest it, and it bounced off of this 50 and then shot on up to the 100% extension. And it went slightly above that 100% extension for a while, but you can see it just kind of hovered right around that. So the main play for the morning would have been to get in on the breakout and then catch it when it jumped up to the 100, and you would have captured a really nice move somewhere along the lines of about 12.5 bucks, or 12.25 bucks. All right, let's see. Next up is going to be Microsoft. Woo, God, that was a mouthful there. So with Microsoft, I did not actually trade it. I got caught up trading Square and AMD, but Microsoft had a run down the previous day, but it had a hell of a range to it this morning, on Friday morning, and it was holding a good, solid, steady 45-degree-ish line for the way it was proceeding to gain. So I wouldn't have taken it right out of the gate, but right here around, what is that, 45 minutes into the trading day would have been a great entry point. So you see it come up, test the pre-market highs, drops down, comes back up, hits the pre-market highs, breaks them, slowly grinds down in a like a bear flag, and then it tries to come up, fails, comes right back down, and then you immediately pop back up above the pre-market high, breaks back through the VWAP. This would have been an excellent entry point, blasts up to the 50% extension, peters out there for 2 minutes before blasting upward, comes up just shy of the pre-market 100% extension. But if you look, it would have been dead on balls with the pre-market extension had we not got that last green candle right before the open. So this would have topped out great. And then it comes back up, finally matches that pre-market 100% extension before it drops off a little bit after that. So all in all, on Microsoft, you could have made yourself a good, reliable $2.73 grip, which is the better part of the true daily range of 358 that we had, an average true range of 377. We were a hair bit below that, but you know what? It's not bad. It was a really good day, right? So next up, we're going to have a look at AMD. The previous day, AMD had been selling off, then it finally based at about a 150% extension to the downside from the pre-market low. And it based out really nice, and then it started taking off, had basically the same shape as most of the other tickers, and it was conforming with the SPY. So by the 5:30, 6 o'clock area, my time, Pacific Standard Time, had realized that AMD was in fact going to be a long play for the day. So immediately started treating it like it was going to be a long, and I did take a couple of trades, but I had a short day. I had to be at a couple of appointments for some veterans issues, so I was out of it relatively early for about, what was that? I don't know, 70 some cent, 72 cent-ish. So what did I see in it personally, right? So once it broke this pre-market high, I wasn't in immediately, right? But then it had a strong green candle just blasted up right from this, well, we'll make it a little larger, right from the EMAs. So on the next fib up, it stopped dead on that fib. When it opened the next candle, it tried to come down, and as soon as it started coming up, I smashed the join button and took some shares as soon as I seen it going. Rode that out up to the 100, well, was planning to stop at the 50, and it shot through nice and solid, so I held into my trade, and then I nearly got out here when it had come up, almost tagged the 100 but didn't, and then it slowly came back down, and when I seen it set in this next movement off of the 50, I was banking, and it worked out right that it was going to go ahead and come up, and I captured. In hindsight, I wish I would have got out here on one of these 3 candles, but that's okay. I'd rather not stand the pressure of taking one of these pullbacks, right? But it worked out, and I was able to get out. Then it fell down a little bit, and it got back up on top of the EMAs, and I was having my doubts, right? I thought this thing was going to be cracking at any moment. And when it retested the second time and it had bounced solidly off the 20, I entered as soon as it broke above the 100% extension. And the plan was to ride that up to the 50%, and I did. Well, the 150. And I did, and I got out, and it worked out perfect. It petered around a little bit, came right back up, and then it almost made it to the 200, pulls back, bounces off the 50, bounces off the 50, sets in some higher lows, and then comes all the way up to the 200, and that's where it basically stopped out at for the day. So very happy with AMD. And then the last thing we're going to cover is the other ticker I traded, which wasn't on my morning watch list, and that's Square, just because it didn't have much volume pre-market, and it had suffered like the others about a 30-degree decline on the 200 EMA from yesterday, the day before on Thursday. But then it started ramping up, and it was holding about a 30-degree incline moving forward, and I was okay with that. So what I was seeing was this rounding action, right? It was rolling over, or curling up, rather, if you want to word it that way. So the fibs were working out nicely. It set us a decent range in there. And we actually did about $1.50, well, a little more than $1.50 better than what the true range is on this thing. So it held the pre-market high right out of the gate, and then it started blasting up. Well, the original intention was to wait for it to drop back down and retest, but FOMO got the better of me, and I seen things were mostly coming up. So I got, after it broke out here and it came down, I missed this entry point right here. I was thinking it was going to come down and retest the 20 or the 50, and it didn't. It shot up. So I got while the getting was good, even though this is normally not my type of entry because it was already extended above the upper Bollinger Band. But I got in, and the whole idea was to play it to the 100% extension to the upside. Had thought about getting out right here, but it just was too strong. So I stayed in, let it ride. AMD was working the same way, so it was green. I was happy. I almost got out here when it started dipping, but I just held on to my conviction, and then I got out. It petered around here for a little bit, and I was expecting it to jump up. So I entered in again right above the 100%, and then I got a little discouraged when it hits the 20 EMA, and then it drops a little lower, and I thought I was going to get stopped out on this one and, just had bucked the Tiger's odds too many times today. And what happens, it caught some ground, didn't come all the way down to the 50, and it blasts up through the EMAs, and it comes straight up to the 150% extension, and I got out while the getting was good. I didn't even give it a chance because I knew I was going to be leaving. It comes up, tests around a little bit, and when I seen it bounce off of the 50 EMA, I got in one more time because I knew I only had like 20, 30 minutes to be in a trade because we were leaving the house. And when it bounced off the 50 and it comes up and it gets through the EMAs here, everything else was looking like it was climbing today. So I wanted to scalp out a little more cash. So I just got in heavier than what I normally would go, and I scalped it from here. And when it didn't quite bust the 200, I was thinking about getting out, but I was holding a little bit more. It caught some ground, and when it came up the second time, even though it didn't break this 200, what I was looking at was, you see these levels, really, it wasn't doing anything to prove to me it was going to break beyond here. So before it came back down on this red candle, I was already out here. I just wanted to capture my profit and go, especially being as I'd taken more shares than I normally do. And then, of course, later on, if I'd have held through, yes, it would have made it, but I left the house somewhere up in this time frame, so I would have lost some money if I'd have held out any longer. I got out at the best possible time for me. And then, yes, it did gain some more ground, but I was not here for that. All in all, it was a good, solid performer. It actually, you can look up here. That was a good amount of range for it, It's just, you got to make those personal decisions and have a plan. What does it look like? What does it normally do? And when is the getting out? All in all, it was an excellent day of trading. For the 2 hours or so that I was in, it was a great experience. Good, solid, easy to call action. Definitely the kind of trading I prefer. Just being that it's easy, like I don't particularly care to struggle with these things. I'd rather it be an easy day most of the time, right? Now, granted, the hard days do teach you an appreciation for when things go really well, but I really have an appreciation for these easy days where it's just not taxing. You can make some cash, get you a grip of money, and then get out, This is all a retirement gig for me, so I definitely like it when it's not a stressful 9-to-5 type job for me. Well, anyway, I hope you like it. Hope you got some value out of the way that I'm breaking these things down for you. I'm going to be putting out a couple of videos this weekend, so look for them. Anyway, hit the like button, hit the subscribe button, let me know what you think, and I will see you soon.